Nvidia said there's a major call going on today, okay, that everybody is waiting for, okay? The forecast of Nvidia. What is it going to be, okay? Today or tomorrow, it's either going to be a bloodbath. It could be a very, very interesting day. Rob, if you want to play this clip, go for it with Nvidia's earnings.
How big are Nvidia's earnings on Wednesday night?
It's a Super Bowl, not just for tech earnings, but I think this market, right? I mean, the reality is that there's only one godfather of AI, and that's Jensen. And Nvidia, look, it's the foundation in terms of what demand looks like, in terms of what we're seeing. And, Gene and I talk about it often. I think it's going to be actually a huge positive growth catalyst that we see, not just for Nvidia, but for tech stocks. But it all comes down to, on Wednesday night, you're going to be able to hear a pin drop on trading floors around the world.
I just don't know, Gene, how you even plan for this. Normally, you've got the analyst estimates, you've got a little bit of a whisper number. If they kind of come in a little bit above it, it's good news. Everybody knows Nvidia's numbers are going to be gigantic. Is that a fair statement?
Yeah, it's not only a fair statement. Back on the 28th, Jensen went at the GTC. He basically gave us the playbook through the end of next year. He said this $500 billion in Blackwell and Rubin revenue. If you take that for his word that they're going to be able to do that now, if they can get supply, that implies a 54% revenue growth rate for next year. The Street's at 41%. Now it's come up from 34 to 41. But that's the gap, as I think about this, Brian, that's the gap between where they've set the bar on the 28th.
He gave us 54% revenue growth. I don't know a lot about Wall Street, except I do know this. 54% ain't going to do it when it comes to the stock, is it? It's going to have to be better than 54%, isn't it?
I don't think it needs to be better than 54 this week. I think it needs to be better than the 41 where the Street's at.
Yep. And to Gene's point, look, we're just getting back from Asia, being there 3 weeks. Demand to supply for Nvidia chips is 12 to 1. So it comes down to there's one chip.
12 people want to order for every one potential chip that exists to order.
So there's one chip in the world fueling the AI revolution. And that's why it speaks to our view that anyone that talks, and Gene and I talk about it all the time, anyone talks about an AI bubble here, we are in the third inning of where this is all playing out. And I think that's why this is an inflection point. You're going to see ultimately what the demand looks like from Jensen himself. And I view it as a bullish.
I mean, I was going to say, what do you think about his pink jacket? But what do you think about, Jeff, what they're saying here?
I think it's a lot of words to basically say we have no freaking clue what's going to happen. And what happens in all of these disruptive technological cycles is that, yes, the numbers look good until they don't, right?
Yeah.
This is a 12 to 1 demand to supply. Well, one of these days, it'll be 11 to 1, and then it'll be 10 to 1. As all these companies reassess the numbers that are being thrown around, the amount of revenue that's just required to even have a prayer of breaking even. And then let's talk about the products themselves. It doesn't live up to the hype. So where are you going to get the demand from to maintain that type of growth rate? So the danger isn't necessarily that it's, NVIDIA's earnings today won't be 61% or 62%. It's whether or not we're actually seeing tangible results that actually match expectations.
Tom, your thoughts?
There's a lot of forward that's built into NVIDIA, and what Jeff just said is correct. But I'll tell you something else that people are looking at right now. Rob, if you could really quick go find Cisco and go Max.
Yeah.
Cisco Max. Yep, the chart. You go to the Cisco and Max, and then pull up NVIDIA Max. No, Cisco's earning chart, Cisco stock chart. Yep, and go to Max. All right, let's see if you can find the .com bubble. It's easy to see. It's it's right there. Now let's go take a look at NVIDIA, and go to NVIDIA stock chart and go Max. There you have it.
Yep.
NVIDIA's on the front end of Cisco. What was Cisco? Cisco had 70, go back to Cisco. Cisco had 70% market share in 1999 of routers, 7-0. And then they were given all the IBM patents, and IBM said, screw it, I'm out of the router business, as the story goes. And they were at 84% market share of routers at the beginning of 2000. March 2000, first quarter. Go right there, right there, right there. Yep. There you go, first quarter 2000. That's what 80% market share in a brand new market. Well, we need routers. Routers have to be everywhere. It's going to power the internet. They have to interconnect to each other. That's correct. That's very, very correct. Now go to NVIDIA. And you have here the one guy with the Blackwell chips that's got massive market share. This is what people are looking at when they say AI bubble. These are not a bunch of bears running around like Elizabeth Warren hoping the sky will fall on capitalists. These are people really looking at it and saying, wow, could this be an AI bubble the same way we had an infrastructure bubble for the internet? And if so, that's kind of tough. What I look for after hours today is, do we head for an adjustment? Not a crash, but do we come to an adjustment where PEs come back into a line with a little bit of reality? And the way you do that is forward forecast. And if forward forecast doesn't say, and we have demand, what's demand? They're going to ask, what is demand? 12 to 1, 13 to 1, 11 to 1. If the demand's coming back, they'll say, well, demand's softening. Maybe now we've got all the chips ordered that we need for the data centers, even though you still have to make them. But we priced in all the profit of making those chips into that spike right here. And what's their PE? 52? That's not horrible. Yeah, it was 52 yesterday.
But if you listen to CNBC, they'll tell you it's cheap.
Yeah, exactly right. So what I think about NVIDIA today, take a breath. It's going to be okay. There could be, and by the way, the option volume is suggesting that there could be a 7% downward swing today in the price. And it's
if that happens, how will the market react?
The market react badly because what was NVIDIA's peak 3 weeks ago? 208 or 210? 208, 207. I think intraday there was like a 208 in there. So, and now we're down at 186. So we're 20 points down, 10% down. Another 7% would be 17%. That is a very typical correction. Yesterday at Goldman Sachs event, people talked about you get 15% correction in a hot, frothy market is not unusual. And then they say you grow into your pants, right? Now your pants are kind of baggy because the prices come down. But now through sales, dominance, market share, you grow back into your pants. And so it's a really big thing, just like they said today. It is the Super Bowl, and it's going to determine whether we have like a Merry Christmas or where we have a managed Christmas. And what I mean by that is, does the market begin to make a little bit of adjustment? And then people have to say, okay, maybe I'm a little more cash for the fourth quarter. Maybe I'm this. Will be normal things that happen. But there'll be a lot of, look, the liberal media wants to see an adjustment so they can say, I told you it was a bubble. All these Wall Street bastards, now they're taking it. And these guys just lost $2 billion. They didn't. They lost that on paper, on net worth and stuff. And so one way you're going to have, I think, a flat, slightly up response. And the other way you have a down response. But I don't see that we have NVIDIA saves the world like it did last summer.
Yeah. So I have a whole follow-up question, but I'm going to come to you to see if you have a different take on this.
Yeah.
And I got a follow-up for you guys. Go ahead, Brandon.
Yeah, I think the entirety of not only just the stock market, but the entire U.S. economy looks well on the outside looking in because of the AI, I guess, bubble, because of the national flywheel that has all these giant 7 companies spending money hand over fist on these chips from Nvidia, and probably because they're competing to create the best AI product, and that's what the data centers are for. But that's the sole reason that the economy looks good right now. I think that the actual Main Street is doing much worse than the stock market. Yeah. But I think that if Nvidia takes a dive, the entire market takes a dive because it's probably 8 or 9% of the S&P right now.
Yeah, and what is 8 or 9% of
Nvidia?
Oh, so Nvidia is 8 or 9%. But the question I was going to ask all three of you guys is, this year S&P 500 rate of return is roughly 13 or 14%, give or take, right? Mm-hmm. Do you know what percentage of the S&P 500 is the Max 7 companies?
And it's kind of Mag 6.
28.
Huh?
28.
35 to 37%.
Yeah. Oh, wow.
Yep.
7 companies represent nearly 40%.
That's why they're talking about it being the Super Bowl, because it's the only team playing.
Well, but this is the scary part, though, right there. If you look at it, at 35 to 38%, the 7 companies, Apple, Amazon, Alphabet, Meta, Microsoft, Nvidia, and
so
Tesla.
the question is, are these stocks representative of the
That's
economy,
the question, yes.
the overall system, or are they representative of just this
so
narrow
then this
segment?
is, so fellow on Manect is asking me a question yesterday, and I told him, I said, we're going to talk about it on the podcast, so he's getting the preview on this. So S&P's up 13, 14%. Market's doing great. You take 7 out, it's a very different story, right? So what is the market doing? How is the market doing? What's the market looking like when it comes down to wanting to, buy properties, other industries, hotels. You're seeing some data coming out that just doesn't make any sense in certain other industries. So how bad are things outside of Max 7? Jeff, I'll come to you first.
Yeah, that's the market you want to look at is not stocks. Stocks are somewhat their own reality. The market you want to look at for economic fundamentals is bonds, interest rates, shapes of curves and things like that, esoteric indications. But I will say for the stock market, I know we want to get into this a little bit later, Bitcoin, cryptocurrencies, is sort of a proxy for general risk taking. And with Bitcoin being crushed over the last couple of weeks, it suggests that there is a growing anxiety about a whole bunch of topics I think we'll get into here that's not just related to Nvidia and what their demand versus supply numbers are. It's the overall environment. Has the AI bubble gone too far? And what will that do to the overall economy if it does start to falter here? What are the underlying mechanics in the economy itself? And does that lead to the marketplace, the financial marketplace, looking to take more risks in things like buying stocks or investing in real economy projects? Because I know we were talking about this a little bit. You're right. The mainstream situation is not like it is in like you see in Nvidia and AI. You just look at the consumer staple stocks, for example. They are huge laggards to the rest of the market. Yes, they're up, but they're not up nearly as much. So the overall, that's why I think Bitcoin in particular is useful as a proxy for the marginal risk taker in the marketplace. And that one has turned decisively ugly over the last couple of weeks.
Okay, if you got big plans for 2026, I am telling you right now, I can't tell you how many conversations we're having about business planning. There's a reason why we went less than 22 hours to Dallas and come back, because we want to see exactly what's happening with 2026. We're planning for our family, for our businesses, ourselves. And if 2026 is a big year for you as well, I want you to watch this clip. Rob, can you go to the clip with the Jenga to show them what happens when it comes onto business plan and how all of these things are necessary? Go ahead, Rob.
Business is a lot like Jenga. Every piece matters. You need a vision. Do this carefully. You need capital. You definitely need capital. Let's put this here. Listen, hanging on one piece here, by the way. You need the right team, for sure.
This almost fell off, by the way.
You need sales. As good as this looks, if your foundation isn't built on a good business plan, you know what happens? The whole thing crumbles. If you have big plans for 2026, on December 12th, I'm hosting an event called the Business Planning Workshop, where all day we go through the 12 building blocks of writing an effective business plan. So this doesn't happen to you. If you haven't get registered, click on the link below. Let's spend an entire day together on December 12th. Looking forward to seeing you there.
Folks, click on the link below, get registered. You can watch it with your friends, family, and this is going to be people watching this from 100+ countries, and you can find a way to just get registered at the lowest level, or you can find a way to be on the screen so everybody can see each other, and at the end, we'll do a Q&A for 90 minutes. If you enjoyed this video, you want to watch more videos like this, click here, and if you want to watch the entire podcast, click here.